Back with Midcap Masala, and let's interact with the management that we're very excited to hear from, given the way their quarter three update has been exceptionally robust, and the stock performance yesterday reflected that, and in fact it's reflecting that today as well. So continued optimism on the street, and we're talking about Senco Gold and Diamonds. So let's interact with the management, get a better understanding on what has led to such a good quarter three update coming in from the company. We're being joined by Mr. Suvankar Sen, the MD and CEO of Senco Gold and Diamonds on the show. Mr. Sen, hi, morning. Thanks so much for your time. First up, we
Good
have to
evening.
talk about the quarter three update that you have provided, wherein you have said that you are confident of achieving that 25% plus year-on-year growth for FY26, which, as we understand, is higher than your earlier guidance that you had given between 18 and 20%. On that note, talk to us
Good.
about what drives this confidence for growth to sustain, and how dependent is the outlook largely on gold prices and the volatility that we've seen there.
Thank you very much. See, our quarter three results with around a 51% growth that we've seen compared to the previous quarter, that was mostly driven by the wedding season that was there, plus the festive season. And what we saw is that in the Q2, the growth was muted. Consumers were in a wait and watch situation. Gold prices were in a, just about it began to begin its upward trend, and consumers were waiting that whether that was sustainable or not. But the moment November came in, October end came in, I think that with the gold prices going up, consumers got used to the gold prices, and whatever delayed decisions they had taken, they all thought that no, this is the high time, and I think whatever buying had to be done had to be done. So that momentum and the sentiment of the consumer that we see has given us that confidence that this momentum will continue to remain. We still have January, February, where there are a lot of weddings. And with a 9 months YTT growth of 30-31% that we are seeing, so that gives us that much confidence that yes, we should be able to do a growth of about 25% for the whole year. And the good part is that it is not that we are seeing only value growth happening in gold. We are also seeing value growth and volume growth happening in diamond jewelry, even in silver, where it is maybe bars and coins or gift items. We are seeing a value growth and a volume growth, and around approximately 30-34% of growth in diamond jewelry category is also giving us that confidence that consumers at a certain ticket size, where whether it be daily wear, casual wear, or gift items, they are shifting from just not 22 carat but also 9 carat, 14 carat, just so that the jewelry gets fitted into the budget. So that is what we feel. And in April we have the Akshay Tritiya, where the whole preparation for the next big day after Dhanteras, and all in all, it's a positive situation for the industry.
Okay, so that sounds good, and a lot of other events also, like you mentioned, to watch out for the year upcoming. But talk to us about the acceleration that we've seen in quarter three growth to 51% on a year-on-year basis, much higher than what we've seen in quarter one and quarter two. How sustainable is this? I understand you spoke to us about what could keep the growth momentum going, but this 50% mark is quite a steep jump.
Yes, it is. Well, honestly speaking, a 50% mark is a steep jump. And the sustainable growth rate, I think, is about anything between 20 to 25%. And if you look at, you must look at a long term. So, if we look at the correct perspective, the Q2 growth was about single digit, 8-9%. So it is somewhat that the consumers were in a wait and watch, and Q2 with all the GST decisions, the weather, and the festivities that will start from October, I think consumers were in a wait and watch, and you have to see it all together. So if you look at the YTD 9 months at 30%, that is more of something that should be in the mind of the investors, and I think a 20% plus is the kind of growth rate that one should look at. And going forward, assuming that Jan, Feb, March, we have Valentine's Day, Women's Day, the wedding seasons continue to happen, I think that is what is giving us the confidence that a growth rate about 20 to 25% will continue for the upcoming quarter as well.
Okay, so 20 to 25 sounds good going ahead. Mr. Sen, talk to us about how much of this quarter three growth that we've seen, how much of that came from volume versus the ticket size expansion. So volume versus
Yes.
value on the back of the elevated gold prices.
Right. So see, if we look at the volume, we must keep in mind that actually there has been a 6 to 7% volume degrowth. but there has been an overall value growth that we have seen. Only in diamond and silver, we have seen a value and volume growth of approximately, say, 30+%. But in gold, with the gold prices, because last year, quarter 3, the gold price was average between 75 to 80,000. And this year, quarter 3, the gold price was an average of about 1,20,000 to 1,30,000 rupees. So that itself is a big jump. Another thing to note is that 40 to 45% of the business is coming through old gold exchange. So it is not that the consumers is having to shell out, the liquidity from their pockets to in order to buy gold, but there is so much gold that is lying in the households, in the consumers' lockers and houses. And I think that they are also thinking that, in order to buy any kind of new designs and jewelry that fits into their budget, they're also utilizing the old gold that is lying in their lockers. And that is also it drives in loyalty, it drives in the fact that consumers average ticket size, that itself has grown up by about 35 to 40%. So if it was about approximately 65 to 70,000 in the previous quarters, it is approximately 85 to 90,000 in this quarter. So this is how we are looking at the overall growth journey from a consumer's perspective.
Okay, and also talk to us about the SSSG figure, the same store sales growth number that we've seen, 39% in quarter 3, and even above the 30% mark for your 9 months gone as well. Any outlook on that front? Any number if you could share?
Yes, we are continuously tracking it. See, what one good thing it's showing for our case is that the customer loyalty that we are seeing, when we are offering them with, it's all about fitting into the need of the consumer. So we are trying to understand that what is it that they are looking for, what is it that they're looking for at these kind of high gold prices, and continuously innovating with designs and innovating with schemes and offers. And that loyal customer base is coming back and they are buying, and along with that, there is a strong focus on acquiring new customers. So that is something where we are seeing, be it in the bigger cities or in the tier 2, 3, 4 towns and cities, there is this shift of the consumer behavior from an unorganized to organized, buying from a brand, looking for a better experience, and the trust aspect of it. So that's where we are looking at, having the SSSG, the same store sales growth of 30% plus. But again, every time I say that when we look at a sustainable growth in the future, guiding everyone, it should be anywhere for an overall growth of 20 to 22% as of now, with the way the gold prices are going up. And an SSSG of 12 to 15% is a very healthy, sustainable growth rate. But yes, in the last quarter and in what we've seen this year, it's been very, very strong and positive at 30% plus.
That sounds very optimistic. Mr. Sen, want to understand the store expansion strategy over here. You are close to 200, 196 stores is where you stand right now. In your update, you've also said that by the first half of FY27, you'll be reaching 200. So that's just 4 more stores in terms of what you are guiding. If you could help me understand this number better, and why 200 and maybe not more than 200 stores?
No, we have stores in the pipeline. In the
Okay.
coming quarter, those 3, 4 stores will take us to 200. And then the next year, the store openings will continue to happen. We open the target has been about 18 to 20 stores every year, and it should be a mixture of company-owned, company-operated stores and franchisees. And from the management's perspective, our endeavor and wish is that we may open more and franchisee stores. So looking at East India or North India, especially focusing on the tier 2, 3, 4 towns, we will be looking at seeing that where all the new franchisee store openings can happen. But this quarter, upcoming quarter, 3 to 4 stores, and then for the next year, 18 to 20 stores is what we'll aim to open.
And Mr. Sen, given the way gold prices have been largely volatile, what has your studded mix shaped up to be, and what is the target on the studded front?
See, the studded mix for YTD 9 months has been approximately 12%. And as a team, we are all looking at increasing the studded mix, and over the coming 3 to 4 years, we will be taking it towards 15%. So that's how it is. With the gold prices going up, there are two behaviors that we are seeing. When it came to the bigger size diamonds, there is a sentiment in the consumer's mind that, oh, gold prices are going up. then might as well buy gold and not buy diamonds, because diamond prices are not going up that way. But there is this other consumer sentiment that if I have to buy a nice piece of jewelry, say within 50,000, 1 lakh, 1.5 lakh, then in gold, it will be a very lighter weight design. But if I buy it in diamond jewelry, whether it's 9 carat or 14 carat, then with the diamonds, the design can be much more modern, Western, and much more spread out. So that's how we are trying to manage the situation. And the studded mix is gradually going up. This 30-31% growth that we've seen in diamond is a good sign, and I hope and I positive that this should continue to remain.
Okay, and lastly, Mr. Sen, before we let you go, quickly, if you could tell us how the wedding season sales have shaped up so far, and what's your outlook on gold prices?
So wedding season sales are happening. Three behaviors that we must note of. One is that a lot of wedding season sales are also being held by the old gold exchange, where it is not that the consumers are buying fully with their liquid money, but they're also using their household old gold and exchanging it for the new jewelry. That is number one. Number two is that what we are seeing is that yes, gold prices have gone up by 50-60%, but the budgets of a consumer has gone up by about 20-25%. So it's very important from our side that we create jewelry that is looking heavy, lightweight, whether we make it in 22 carat or 18 carat, and ensure that the consumers ultimately be able to buy what they want to buy. And the third is that using of gemstones, pearls, and such other additions to the gold has become a trend. It is making the jewelry looking beautiful as well, and it is making the jewelry fit into the budget of the consumer. And we have January, February, March, a lot of weddings coming up, so that should be good for the industry.
Okay, Mr. Sen, really appreciate you taking the time out and chatting with us, and good luck for the quarters to come.
Thank you very much.
Thanks so much. Okay, then viewers, shifting focus from a corporate conversation as global